Volatility picking up again during today's trading session. The S&P 500 sold off on some trade-related headline news all the way down to just above the 6650 level before bouncing in the last hour just under the big 6700 strike. If you've been watching our videos for the last few weeks, you know we've been highlighting the importance of the 6700 level. We continue oscillating around it. The market is currently in an indecision zone, and you can see we are still trading within this big drop that we had the previous Friday, 200-point drop following the Trump tweet on that China tariff-related news. And so we've basically been trading within this zone ever since then. So volatility kicking up just a little bit today, but the VIX is still below 20, and we're starting to get into the meat of earnings season in the next couple of weeks. So I think that's going to be the deciding factor on whether we break to the upside out of this range or to the downside. In terms of the gamma exposure data, we're still seeing a relatively positive skew across the indices and most of the major stocks, although negative gamma exposure has picked up obviously in the last week and a half. The positive skew up to the 6,800 strike still remains fairly strong. I think closing right at this 6,700 level was an important close for the market. We'll see if that can maintain into tomorrow. Zooming out here to our daily candlestick chart, this is something we've been discussing quite a bit in our daily live stream, which, by the way, you can catch at 10:30 a.m. Eastern. I'll put a link in the description below. But overall, we're still in this larger uptrend coming out of the big dip last April. You can see gamma exposure at the 6,000 strike is obviously still quite large. This is going back to the trading action around the 6,000 level earlier this year, and that open interest in the options market is still sitting there at 6,000. So this is longer dated puts and calls at this strike. Clearly a lot of hedging activity there as well. If we do break this trend and break out of this 6,500 to 6,550 zone, a breakthrough that would probably see that big 6,000 target being hit relatively fast. So we're in a little bit of a precarious spot. We're giving it room down to 6,500 for potential support. Obviously, we're well above that right now at 6,700, but just as a note to the downside, that is a potential target if we really see things unravel in the coming months. However, the most likely scenario in our view is that the market does find its footing, in this 65 to 6,600 zone, and we see a continuation into year end up towards this gamma exposure at the 7,000 strike. Of course, each and every day we're watching the volume in the options market at higher strikes, especially at these out of the money strikes, between 6,800 and 7,000. The more volume we see coming in here, the more likely gamma exposure is going to be building at those strikes, and that's going to just increase the magnetic effects for the underlying price to move up towards those levels. Of course, we continue having large cash flows coming in the market still, and we think that's going to maintain into year end. So next, let's turn over to the volatility index. I was mentioning this earlier. Of course, we did see that volatility spike over the last week, but starting last Friday, vol sellers have been back in force. Of course, we did have a little bit of a pop today, as I mentioned, but we're still well under the 20 level, and that's kind of our line in the sand for volatility to enter a new regime. We like to see the VIX sustained above 20 for an extended period of time to define that volatility regime. And just to highlight that point further, you can see over the last several months, we've basically been in this low volatility regime where the VIX spent very little time above that 20 level. So this spike up here is pretty significant. We actually had a few closes above 20, didn't last long. So if we get back up above 20, that could be some cause for concern. Of course, that goes back to the potential trend line break in the S&P 500 and that lower target of 6,000. So all that kind of works together. So far, we are in the safe zone here under the 20 strike on the VIX. If you look at the gamma exposure data, most of the gamma exposure is concentrated at 20 and below. Most of this is negative gamma exposure, just showing that lower prices are more likely as vol sellers are coming in. And so that's also being reflected in the options market here as well. Next, let's take a look at Tesla. Tesla reporting earnings after hours today. The stock is down. It's currently trading in the lower 420s, around 423 in the post market. And you can actually see as we zoom into our chart, that puts it down here in our lower dealer cluster range, somewhere in this zone. That's actually a pretty interesting area for support. We've got the rising 50-day EMA, which is currently sitting around the 400 strike. There's a lot of support here at 400 and above. And so this is an opportunity in our view, as Tesla is pulling back into these levels, to enter into a potential long position for later in the year. You may remember that we were trading an iron butterfly strategy into the October 17th expiration, which we actually closed out for a really nice profit. And since then, we've basically been waiting for a pullback in Tesla for an opportunity to get back in. You can look up here, up the options chain, at all the gamma exposure at the 450 strike and the 500 strike. And even today, prior to the earnings release, a lot of volume was traded in the options market. No doubt this is speculators coming in today. At least some of this volume for potential upside in this earnings release. Of course, they're not getting that, so a lot of that premium is going to be draining, but that just opens up more opportunities for us. We're going to give Tesla a day or two to find its footing, and then I think entering a position, assuming that the gamma exposure picture holds up here at 450 and 500, I think this overall trend is going to continue. And so we basically just need to wait and see tomorrow and into Friday to see how price holds up. But basically anything above the 400 level looks good to us for continuation to the upside. By the way, if you want to track our trades in real time as we manage our options portfolio, you can become a member at geeksoffinance.com. You can also get a sneak peek of what we're trading right now by jumping into our community Discord, absolutely free. I'll put a link in the description below to both of those so you guys can check it out. Next, let's take a look at Meta. This is a name that we recently entered into a position, and it actually held up relatively well today. Meta today was up 0.02%, closing at 733.41. The past few trading sessions have seen price hovering right around that 50-day EMA, which is this red line on our chart. 50-day EMA currently sitting at 733.32. You can see large gamma exposure at the 750 strike and the 800 strike. Look at the volume in the options market today at that 750 strike. Over 20,000 contracts traded at that level, and we think that's a near-term price target in the coming weeks. Obviously, Meta does have earnings coming up, so be aware of that. But longer term, we think Meta has a really good shot at even above 750, maybe even to the 800 strike into year end. So this is going to remain on our watch list for potential longer term play into the November expiration, or maybe even into the December expiration. And for a limited time, you can get $300 off our yearly portfolio manager tier subscription. Use code FALL2025 at checkout. We do have a few spots remaining, but this promotion is going to be ending soon, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies, and you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and ideas, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much everybody for watching. We'll see you guys in the next video.